Hello, welcome to the Capital Employed podcast. Joining me in conversation for this episode was Michael Fritzel, also known as Fritz, from Asian Century Stocks. Fritz provides a brief overview of Asian Century Stocks and what countries and businesses he likes to focus on. He then walks us through his thesis for investing in two companies which he is bullish on, one listed in Thailand and the other in Singapore. I really enjoy listening to him and I think you will too. Before we jump into this episode, do make sure to add your email to the Capital Employed email list. We will be publishing some exclusive interviews that will only be available to those on the list. To receive these bonus episodes, please visit capitalemployed.fm/exclusive and add your email to the list. Also, if you are listening to this podcast on the Apple Podcast app, it would be really appreciated if you could leave a review, as it helps us spread the word, and the feedback is great too. Okay, on with today's episode. Please enjoy my conversation with Fritz. Hi Fritz, thanks for coming on to the podcast.
Thank you so much.
Can you explain briefly what is your background and how did you end up investing in Asia?
Okay, so I run a website called AsianCenturyStocks.com. I've been on the buy side for about 10 years, working for a family office, emerging market funds, and also a hedge fund. Over those 10 years, I've been mostly in Singapore, where I've been living for 7-8 years. And before that, in China, where I was working as an analyst for an emerging market fund based in Shanghai for about 3 or 4 years. So I've been covering the region for quite some time, mostly as a generalist analyst, and been traveling a lot throughout the region, mostly in China and Hong Kong, but also in Southeast Asian countries such as Indonesia and Thailand. Prior to Asia, I've been here for 12 years now. I worked as an investment banking analyst in the UK, in London. So that's my background. And also, I should also mention that I'm Swedish originally, but yeah, I left Sweden 2006, so it's been 15 years roughly.
And can you tell us a bit more about Asian Century Stocks?
Sure. So Asian Century Stocks is a Substack that I launched just recently. It's focused on finding Asian value ideas. So our target group is mostly investment professionals. We keep the research pretty sophisticated. I think pretty serious. We release roughly 20 ideas per year across all sorts of sectors. But all of them have this value bent, looking for quality, but at a decent price. So we pay a lot of attention to valuations and also catalysts. So that's what I hope to achieve with the website, which is also built on the Substack platform. Other than ideas, we also provide industry reports occasionally, as well as also other types of articles that more emphasize certain catalysts that could lead to trades. We charge we charge $30 per month, which we think is pretty attractive. You get a discount if you subscribe to more than 12 months. And that should be, if you can find at least a few good ideas per year, that should pay back the cost pretty easily. Also, the target markets so far has been East Asia and Southeast Asia. That would be countries like Japan, Hong Kong, China, Korea, Taiwan, and also Southeast Asian countries such as Singapore, Malaysia, Thailand, Indonesia. So those are the target markets so far. And if you go to the website, you will find our previous ideas. They're under the About page, and you get a sense of pretty much the types of stocks that we like.
And how do you generate your investment ideas? Where do you find these companies?
Most of the companies are those that I've met in the past. Been covering the region for a long time, so I know pretty much which stocks are listed in each of these countries, at least among the larger mid caps and large caps. But right now, specifically looking for catalysts, and it's been quite helpful to invest during COVID, because as long as you are positive about the resolution of the pandemic, you can be positive at least about cyclicals. So a lot of ideas, many of them have something to do with COVID-19, and if the pandemic one day disappears, they'll do very well. So that's one way of sourcing ideas. We also look at insider buying, as well as buybacks as a way to generate ideas. And sometimes we can also find ideas from the portfolios of other very intelligent investors.
Okay, and do you mainly focus on larger cap companies, or do you really go down into the smaller companies as well?
It all depends. In fact, some of the companies recently that I've covered are actually pretty small, market cap 200 million to a billion. Although it's a good mix. We also had stocks with market caps of 20, 30, 40 billion as well. So it all depends. Of course, it's easier to find good ideas if they're smaller, but it's all, I have to weigh the liquidity factor as well. So it's a good mix.
And do you find that Asia offers much better value compared to other locations around the world?
I think certainly, generally speaking, yes, there is a lot of opportunities throughout the region, and there's not as much competition as in the United States that I'm sure of. So stocks are generally quite inexpensive, with a few exceptions. So Southeast Asia, especially Thailand, is a place with tons of ideas at the moment because tourism is still weak. Korea, on the other hand, or Taiwan, and to some extent China A shares, those markets are a little bit more difficult to find ideas in.
Yeah, so if we can jump into your portfolio, can you talk us through two stocks that you're quite bullish on at the moment?
So one stock that I would like to highlight is a Thai stock, Thai company called Major Cineplex. And the stock price is pretty much the same level at which I recommended it initially, about 6 months ago. It is a really well-run company, and the CEO, who I met a number of years ago, he's just brilliant, fantastic entrepreneur. He's a first-generation entrepreneur. He started the company in the 1990s, and he's built it up to what it is today. Major Cineplex, they have about 70% market share in Thailand in the cinema industry. They have 820 screens under management, roughly, and the performance of the company has been generally very, very strong, with ROEs well above 20%. The case there is that the company doesn't have a lot of debt. It has a pretty strong balance sheet. It's been hit by the pandemic, but for sure they will survive, and they will prosper following the pandemic. So the only question is, how much will the stock, how fast will the company recover? I think the Thai cinema industry has growth potential. There's an underlying growth profile of the industry. There's a perception that Netflix is taking over or taking market share from cinemas. And that could, to some extent, be true, but it's also a really underpenetrated market. The number of screens per capita is about 1/4 that in Korea. Compared to the US, it's probably roughly like 1/7 of the number of screens per capita. I think the growth rate in screens should be somewhere about 5 to 10% per year on a pretty steady basis, together with also higher ticket prices of a few percent per year. You should be able to see a growth profile of about 10% per year. The current valuation it's not too much in terms of the forward multiple, somewhere in the around 10, 11, 12 times PE, depending on what you think is going to happen to earnings. But that's assuming a recovery, of course. Historically, the stock is trading at closer to 20 times earnings. So there is a decent upside if you do get a recovery from the pandemic. Everything has to do about vaccination, the pace of vaccinations, and also recovery of, I guess, the economy itself. Tourism was one part of it. So that's pretty much the case. I always get a pushback on this case, saying that everyone will just watch movies on Netflix in the future. I don't really think that people go to the cinema just to see the movie. That's part of it, but that's not the only reason why you go to cinema. It's also a dating option. You go there to have a night out with the friends or with your partner. I don't think it will ever take over completely. I mean, I don't think OTT services will take over. And another thing is this theatrical release window. It's been about 90 days historically. That's been narrowing, and it may continue to narrow. But at the same time, I think studios, they really like to distribute movies via cinemas because it highlights the movie to the customer, whereas movies can just get lost in these services. Many of these straight to Netflix or straight to OTT releases haven't been all that successful. So I do think studios, they still want to distribute their movies to cinemas, and I think customers still want to go. I can move on to another case that I've featured recently. The company is called Delphi. It's a Singapore-listed company, but the major market is in Indonesia. They produce chocolate products, and they've been dominating the Indonesian market for about 6 decades now. Their brand names are extremely well known throughout the country, having almost 50% market share. So that's pretty impressive. Yet the stock price is, or the market cap is below $400 million US, almost microcap territory, which is surprising because Indonesia is a big country, 280 million people. And it's also a very attractive country in terms of the penetration rates of chocolate. They're about 1/4 that of Japan and only 1/15 that of United States. So there is underlying growth potential in penetration, as well as also population growth, where the average age is 30 in Indonesia and growing very nicely in terms of the overall population. So if you get GDP growth, population growth, as well as an S-curve effect from high consumption of chocolate, that could lead to something very positive for the company. The stock trades about 0.7, 0.8 times sales. Their margins have been burdened a little bit by heavy investment in new factories. The utilization rates are about 55% at the moment for their Indonesia and Philippines factory. There is margin operating leverage in the business, but we shall see. And another asset that I think is not generally recognized is the fact that they have connection to about 400,000 points of sale in Indonesia. And that's a unique asset that MNCs should love to have. So it's a definitely M&A target. We know that the management team they are not interested in selling the company, but they have also said that the price is too low for those incoming bids. So it's just a matter of waiting until that time comes. The current management team is old. It's run by 3 brothers. They're now in their 70s. So we'll see. There is at least one son who's also involved in the business, but not in a major management position. So that's pretty much the case. Also, I should mention that the corporate governance seems okay. It is a family-run company, but no major parent listco issues. Related party transactions are quite limited, and also they have a net cash position. There is a pension liability and also a contingent liability from a lawsuit in Brazil, but those are not major. And I think you should see the company as being net cash in net cash position. So that makes it pretty attractive. The reason why the stock is down is because they report in US dollars, and since 2014 the rupiah has dropped quite a bit, about 30-40% against the US dollar, which makes it seem as if the company is not growing, but that is not the case. Also, they've reduced the number of SKUs of about 30-40% because they're basically rationalizing the product portfolio. But some of their brand names, such as Silver Queen and Ceres, are doing very well. So I see the stock as having growth potential. There is competition, but with this type of very strong market share and no debt in a very attractive market for chocolate, I think it's a very, very strong case at this point.
Thanks for sharing those 2 companies. Where can the audience go to find out more about you?
Well, I guess if you're interested in finding more information about Asian Century Stocks, you just go to the website asiancenturystocks.com. Go to the About page. You can see all the previous ideas. And if you're interested in subscribing, you can just try press subscribe and try it out for a month and see what you think. You can also find me on Twitter, where my handle is Fritz844 at FRITZ844. So that's where you can find me.
Thanks for coming onto the podcast, Fritz. It's been nice to listen to with your insights into Asia.
Thank you so much, then.